All right, good morning and welcome to the show. This is a weekly jargon. I am Jose Rodriguez.
And Rohi Zachariah.
And today, Rohi, we brought up another interesting topic, homes versus Main Street. When I say that homes versus Main Street, I think the topic today is talking about investment, right? I think when we think about investments and we think about homes, we look at how Wall Street has really focused its attention on wanting to bring investment with homes. And it seems like everybody and their mother wants to not only have a home, but also an investment. And that's created some crisis. So the focus of our show today is to talk about, are we investing in the right thing, right? And not to say that we don't want you to buy a home. It's just that after we break it down, maybe it'll make a little bit more sense to you. Give me your thoughts on the topic today here, so our audience kind of gets an idea.
So, I mean, just to kind of look at the overall, when you talk about housing and affordability and kind of where we sit today, you know, it's hard because, again, as a homeowner and hearing people who want to be homeowners, some of the difficulty they find in today's world of saying, if you are, let's say, middle income, you know, you're making maybe $60,000 or less, you're priced out. I mean, there's not even an opportunity. And then you get to the wheels turning of saying, well, you know, how does somebody like that, how do I make more money? And it goes to business, you know, and trying to get, you know, the capital to do one or the other is definitely a much different process. And I think that's kind of, where we're going to talk about today. So
yeah, and part of it, just to kind of give you guys an introduction to it, is just the missing investment, how small business neglect may be driving the housing inflation or crisis that we see here today, right? And I think over the last decade or two, well, most like the last decade, we've seen prices really increase to the point where it's probably not affordable for a lot of locals, especially when you look at their median incomes and what have you, right? It's not to say that you still can't buy a home, it's just becoming more difficult for you to want to get out there and take on a debt that doesn't support the income that you have. Now, that's not to say that everyone here is, but a good majority of people, hence why you're not seeing the volume of people buying homes, right?
Yeah.
There's a demand for it because it seems to be a safe investment, not so much for the people buying the house, but for the investments or the institutional investment that's taking place. The capital follows safe investments, right? And we've kind of neglected the other investment, which is the small business. And that's what we'll dive into. So I think that's important to understand is that if you look at, I mean, we like to use examples, especially here locally, like Madera, for example, right? And when we talk about that, I look at downtown, for example, right? Do we have investment in small businesses? Does the city have an investment portfolio to say, here you go, residents or businesses of Madera, let's get you on your way, or are we relying on banks?
yeah, and I think that's, I mean, not to use downtown as a specific, but I think what's good about that is, you know, if you kind of look at Madera, let's say 20 years ago, you know, maybe even more, let's say we went 30 years ago, you know, downtown was thriving. It was full of business. I think you had, you know, you had a lot of life in there, and the population has grown tremendously since then. And you have now empty businesses and unutilized property. So when you kind of look at it, it kind of doesn't make sense because you're saying, well, wait a minute, we have more people that should support more business. We should have all of those businesses full and have a problem of finding somebody to actually open a new business, but you kind of have the opposite. You know, you have some of the energy has left maybe that specific area, but you kind of get into this fight of saying, okay, well, what has grown more? Have we gotten more businesses or have we gotten more homes and population? And I think as a whole, we've definitely grown in population. I mean, homes over the last 30 years, home growth has exploded. So there should be, you know, more people that are, you know, in fact, living in Madera. So you would think that there'd be, again, enough momentum to support a growing business enterprise, and I just don't see there's a kind of a disconnect there.
Yeah,
you know.
Yeah, and you know, I mean, obviously, California remains one of the least affordable housing markets in America, right? And people will tell you that's
Yeah.
why you see the exodus of people saying, well, I'm going to leave somewhere else. It's no longer, well, two things, right? It's no longer affordable, and with businesses, it just says it's just not business friendly, right?
Yeah.
And you see that a lot. But in if you follow the money, and why capital kind of flows into housing, it's because housing seems to be banks perceive it as a very predictable and a very safe asset, so to speak, right? Because you're collateralizing a home. So when you have an investment and you have security behind it, I mean, it's easy for banks to say, here you go. So as long as you meet these very easy, low cost of producing this investment, and what I mean by that is we've kind of put the cookie cutter approach when it comes to homes because it's fairly simple. You go through the process of an application, you go through the process of underwriting it, and you get it approved. I mean, and here's when I say pretty simple, is that it's become down to where you've made that low cost. So it's like producing a product, right? You put an assembly line out there and you get really low labor, you're going to produce a product at an affordable or very attractive that people are going to have a bigger demand for it. Well, homes are no different because you've done this with the lending, especially of homes, right? You've done this process that is very predictable, and therefore, when you have government-backed securities like that, I mean, it makes it easy for any investor to say this would be a perfect investment for me. And what I mean by investor, I don't mean for that typical homeowner looking to get their first home. I'm looking for the institutional investors that want to put a lot of money, and concentrate billions of dollars in acquiring assets of this nature because they're very safe assets.
Yeah.
So,
but I mean, I think that's part of the problem too. Is I mean, I know we hear the excuse that obviously labor has gone up, cost of goods has gone up, so therefore the cost to build a home today has obviously gone up. But to the other point is if we changed methods and all of a sudden we were able to build a house, let's say for $50,000, like maybe a 1,600 square foot home for $50,000, that builder would not all of a sudden just say, well, you know what, I'm going to be good, I'm going to sell it at 150,000. They would look at market rate and they would say, well, hey, you know what, everybody's willing to pay $300,000 for that home right now, so therefore I'm going to keep it at $300,000. So you almost have to have rules in place that go, you build it for 50, you can only cap it at 150, and the people buying it have to meet maybe some criteria that are normally ineligible to buy a home. Like you really have to start trampling on capitalism to keep affordable housing affordable, because otherwise every investment person's going to say, well, shoot, I mean, if I 1,600 square foot home, I can buy it for 100,000, 150,000. I can get, the standard rate of a rent is, maybe 1,600 to 2,000. I mean, it just becomes an investment overnight, So it's difficult when you kind of want to again break free will and capitalism at its heart to just kind of make affordable housing, because I don't think you can ever have true affordable housing unless you get to where we're going, which is we're shrinking homes, we're shrinking property. We just haven't broken the barrier just to understand that you already only have about 6 feet from your neighbor. You might as well just share the walls, and since we're sharing walls, we might as well just share a complex, and you might as well just make it an apartment. You know what I mean? Like we're getting there, and we're fighting off the inevitable of saying, well, if you can only afford $1,000 payment towards your place of living, it's going to have to be, this apartment. It's going to have to be this. Then it doesn't have to be a small apartment. It could be, on the larger scale. But the economies of scale it just tells you that you just can't build a house smaller or cheaper, or put enough things in place to stop it from going where it's going. So
yeah, no, and I mean, I totally agree with that, Rohi. I think what I see is because homes have become a safe haven or a safe investment for some folks, you have to look at it this way: is what is it producing once you buy the home, right? I mean, there's jobs obviously with construction and what have you.
Yeah.
But on the opposite end, you know, and I think this is the title of the show is Homes versus Main Street.
Yeah.
You know, what would happen if banks, and again, I'm going back to your banks, your institutional banks, the investment was done at the same rate as you did for homes, correct? And what I mean by that is that the criteria or the risk for investing in small businesses is much higher. So banks are less likely, and I'm not saying less likely that they don't want to do it, it's just more rigorous underwriting and require to see, well, if I'm going to invest in this business and I don't know where the hell this business is going to be in 2 or 3 years, I want predictable income. I want predictable cash flow. I want something to show that in any case that I cannot recover my money, what am I going to collateralize? And sometimes businesses, because they lease certain areas, it's just not as promising. So not making that investment, then you don't get to create products, you don't get to create jobs, you don't get to increase local wages, expand community wealth, diversity, economic growth. And that's what I'm talking about. I'm talking about real growth, right? And I'm not saying that the homes don't classify real growth. I'm just saying that is our investment, and I'm not saying the city's investment, I'm saying is our investment in the American society, is the investment today producing real growth, or are we chasing a bigger debt?
Well, I mean, the issue, and it's in its title, I mean, the small business. So what we have society is excited by corporation. You know, if you ask residents of Madera pretty much any town, what are they excited by? When are we getting a Target? When are we getting a Costco? You know, they were excited when we got a Walmart. You know, and then they wonder why, like when Walmart came in, why you had a destruction of small businesses that basically were being, you know, that were alive because they were doing the business that Walmart came in and took over. So society wants the big business. Society wants the corporations because they think it's cheaper and it's going to bring more jobs, right? How many people does Walmart employ? But not realizing, yeah, but when you destroyed, let's say, 50 businesses, you know, did we get more jobs, or did we just move those jobs over to Walmart? But then you kind of killed off a whole ecosystem. So when you say like small business, okay, I mean, the gun store is a perfect example, right? When I first opened back in 2012, 2011, there was, I believe, about 5 of us in town, right? I'm the last Mohican here. And you go, well, if the business is there, because we do well, right? Somebody would open up another business. But it doesn't exist because I'm sure somebody's doing the math to realize it's not going to make sense. And the bank's going to come in and say the same thing. Well, how much money are you going to make? Almost like mob style, right? I mean, that's kind of the bank's idea is, you know, you can see them in the mob saying, how are we going to get our money back? You know, where's our foot in the door to guarantee our return? And I think small business as a whole suffers with that because of the corporations. Because again, for me, if I was to say, what other business would I open? What can I say that I see Jose thriving at? I want to open too because I want a piece of the pie. I don't see it. I don't see any business right now where that's not a corporation, not, like I said, not a Walmart or something, where I can say, I see a way in where I can take a piece of that person's pie. They're all corporations at this point. And then now you got to compete with the corporate model of, well, we're going to make pennies, but we're going to make a lot of pennies, and you know, we're going to have, you know, it basically is lean of a business as we can have, where unfortunately small businesses don't thrive on the lean aspect, you know.
But you know, and it goes back to what I'm showing here with some of the slides is that I think the mentality of supporting local businesses has really kind of faded away because we talk about it, right? But do we really support them? Do we really go out and say, you know what? GBS, for example, locally owned, do we go buy our material there, or do we go to the branded corporate store that seems to have it there for like $2 less? I mean, what does that mean? And I mean, they both have jobs, right? They both have jobs, but one has a significance here is that, hey, this is a local business that's been here for a long time that has produced something, right? Produced jobs for the people that work here, whether they're students and what have you. Yeah. And it's not to say that the other corporate companies don't do the same, but to what scale, right? Are they long producing jobs, generating jobs? And I guess, when it comes to like homes, for example, and again, this isn't bringing down homes. This is not me telling you not to go and invest in a home. It's a great investment. Real estate has always been.
Yeah.
But just like it's a great investment for you, guess who that great investment is for as well? It's for these institutional investors because they know during inflation, they can always park their money there and they know they're going to get a decent return on it, whether it's through rents, holding the asset and what have you. And that's what becomes speculative. That's what I'm talking about is if I give you a hypothetical scenario, for example, let's just say that a bank would lend $5 million for investment in property acquisitions. And the alternative to that would be $500,000 to business loans, right? We have to look at it. Which investment would create a long-term economic value for the community, right? Is it the homes you purchased, or is it the businesses that you created that in turn are going to provide new equipment, right?
Yeah.
Additional employees hired, expanded production and services. And then you look at the productivity. What productivity are you going to produce? And I think that's the argument that I have in this particular segment here today is homes versus Main Street.
Yeah.
What are your thoughts? If you have a comment on this, I mean, are we investing so much in the idea of homes that we've kind of priced ourselves out so much?
Yeah.
You hear what I'm saying?
Yeah.
And I'm not trying to say, again, and just reiterating that this is not homes aren't a good investment. They're a great investment when they're affordable.
Yeah.
Right?
Well, I mean, to your point, this has been my, my explanation, again, when you talk about like the price of ammo, people, as ammo was going up during COVID and the price was going up, I tell customers the same thing. It's because you're willing to pay it. When it went up another 50 cents, well, why is it going up? Because you're willing to pay it. And if you stop paying it, the price will come down, because everything we live on a supply and demand curve, and I think housing's no different. I mean, to some degree, and again, not to hurt the market, but to some degree, you kind of want to tell people, well, if you move in with your parents and you stop renting that place, and all of a sudden that place remains vacant now for the next 6 months, guess what? Rent's going to go down. They're going to give you incentives because they need to fill it. And housing is no different. If all of you guys, if almost like when they do the fuel, what do you call it, protests, and they tell everyone, don't buy gas tomorrow, and it's like, one day might not do it, but if you stop buying gas, if you told everyone stop buying gas for a week, and I guarantee price might go down a little bit because supply is going to go down. They got to move that product, right? They got to do that. So, every industry can have that effect. So, like I said, why is housing so expensive? Because there's still somebody in line to pay for that house, and the average time houses stay on the market, and that's kind of an indicator, right? During the height of COVID, when houses were not even staying like a day or two, and they're just you pop on, you pop off, you can keep moving that. That's how supply and demand grow. You just keep moving that price up. But if we get to a point to where the average home is now sitting 6 months or longer, it's only natural that you're going to see pricing come down. So you kind of have to have, again, that balance to say, same thing with businesses, how does business thrive? It's going to thrive when people hear, I opened a place and I'm doing well. And the next guy, down the street says, I'm going to do the same thing. And they open a business and they do well. We had that again during COVID, where every YouTube video was like, how do you make a side hustle? And how do you start a new business? And how do you, so small business really exploded. But how do you keep the engine going? Well, now you're a business, so you have to continue to grow. You have to now take out your competitor. You have to start kind of doing some of these things where, like you said, if unless the home burns down to a bank, it'll be there for the next 30, 40, 50 years, just generating money. It's a very safe investment where that business they lend money to, bad practice or just
risky,
just whatever. The market just doesn't need, fling-flongs anymore. It just goes out of business.
Yes.
Now, like I said, like a mob, the bank is there to say, hey, we gave you money. Where's our money at? I don't know.
And that's kind of the point here, Rohi, is that there is no I mean, the argument would also say that, you know, do we have a shortage? And I think we do. I mean, I think the increase in population, we have a shortage in housing. We also have some restrictive zoning in certain cities and what have you, and that makes it difficult for people to get out there and want to invest and say, you know, I'm going to invest in these units, but it's becoming very difficult for me financially to put it through because these requirements are just astronomical for me. There's no way that I can afford this. So there's a combination of things that certainly prevent us meeting that housing shortage, right? But at the same time, it's a very huge focus that has increased prices and made it really unaffordable for a lot of folks.
Yeah.
So I know there's got to be balance. And I was reading an article the other day. I'm not sure if the only bank that is a state bank, and here's for those folks that are very conservative, and you know I'm one of them too. But they talk about social programs, right? And a bank owned by the state, I believe it's North Dakota, has its own bank. And their primary goal of that bank is to promote business for agriculture and what have you, you know, and strengthen its population by creating, you know, very promising business decisions, right? And here you have a bank that's outside of the institutional banks that you see everywhere else, gearing to promote that for its. I mean, it's been in existence since the early 1900s, but look, it's got billions of dollars in assets now. During the crisis, it didn't suffer as much as other institutionals, too big to fail type of deal. So that's telling you that these things do work, and it's the investments. Now, could we here at our city and possibly county be able to form some type of bank that promotes only that? We have our EDC, for example, right? But have we really put focus on trying to say, hey, go out and promote the small business, go out there and ramp that up a little bit, and any losses, we can cover them through these reserve balances that we have. And that requires a lot of decision. Nobody wants to make that decision where, hey, this business just lost $100,000, having to come back to the council and say, hey, well, you guys approved this. Yeah. Right? So I think those decisions and that type of conversation needs to be had, because if we want to see real growth and productivity, then we have to come back to the table and start talking about small businesses. Yeah. And what that means as far as investment. What are we willing to put out to expect? What's the outcome we want, right? I mean, knowing that we may take some losses at the beginning, but given the history of what other banks have done, local community banks have done, I don't see us not being able to get through those hurdles as well and be able to promote a more productive small business community.
Well, I think small business they don't struggle with, I mean, they do to some degree the money. I think most small businesses struggle with business. Like, you have people who have an idea, they start either small and, maybe they're selling something and they decide they want to jump into a full retail business, or they just have the idea that says, hey, I want to open this shop, right? A restaurant or whatever it is. And they may do one aspect well. They may cook the best chicken in town, but they don't know how to run a business. They don't know how to have employees. They don't know how to, kind of do the more important aspect to some degree, and it may fail. So, I mean, cities can always, if the city wants to take an approach, or EDC or whatever, the approach can always be, how do we encourage people who are looking into doing a business to doing business right? Because you want to give them the right tools as well. You want to help them out. You don't want to just give them a loan and be like, all right, we help you do really good. Are we telling you how to do it well? Are we, what are we doing to kind of make it prosper?
And that's a very good point, Rohi. So are we doing that at a city level? Are we doing that at a school level, or some special training for folks that are thinking of saying, hey, you know what? I want to get into business. Where do I go to get resources, right? Yeah. And I think we already have that. I just don't know if it's being promoted, or even as council members, are we promoting it? Maybe we need to get educated or informed a bit more so that we know what we can what we can tell our constituency, especially those that are looking to get into business, right? Here is an avenue for you to go out and understand business before you jump in there, right?
Well, I'm just saying, like, let's say, and this would, it kind of depends on numbers reported, but let's say I want to open a food truck that sells hamburgers. Do I have a tool that tells me how much the average food truck in Madera makes? Like, how much do they report? How much sales do they report? You know what I mean? Like, there could be simple tools like that. I mean, that you can, because obviously you have to report your income. You have certain aspects that we have to track, but certain things that I may go look at and say, like, I'm thinking about opening this business. How much do they typically make in the city of Madera? Not like a city like Madera, but in the city of Madera. And I might look at it and go, like, yeah, I'm not going to open one because that doesn't make quite enough or as much as I thought it would, right? Like, there's almost like, again, the cart before the horse is, so I think a lot of people just get the idea that I'm going to open because I think I'm going to do well, and then you don't look at the numbers realizing, like, the numbers are there. Like, every hamburger truck in town only makes, $2,000 a month or whatever it is, and going and, like, it was there already. You already set up to fail. Like, there could be simple data points like that, or again, it could just be simple educational pieces that just says, here's how you open a bank account. Here's how you apply for a loan. Here's how to, the free assistance that may already exist for you that you're not aware of. You might get, because you're a small business, you might get a discount on your paper or what, like whatever. I'm sure there's things out there that can help. I know there's assistance for veterans. If you have a veteran-owned business, like there's certain government programs that kick in to give you, I'm sure, either better loans or cheaper whatever. Like there's definitely a lot of those avenues that I think most business owners or potential business owners aren't aware of that they can take advantage of to maybe help them again. Because a small business in general, I forgot how many years you got to be in business before you actually become established. And I think that's the other difficult part is people think I'm going to open day one and I'm established. And it's like, no, it takes many years of running before you kind of actually get to an established point that you're profitable. I mean, you're going to
I think
lose. So.
The first couple of years, I think it's the investment of trying to get your business going, the marketing and what have you. And I think, in restaurants, I think there is a 2-year window. Mm-hmm. If you didn't get past that 2-year window, it's probably not going to work, right?
Yeah.
And I don't know if that holds true for a lot of other businesses, but the one thing that I do walk away with, especially when we go out to these ribbon cuttings, right? We're always very optimistic that, hey, you're going to do great, right? And we're here, we're going to take a picture, looks good, let's promote it. But soon after, I mean, there's many ribbon cuttings that you go, we all go through, right?
Yeah.
And when we see businesses open, I mean, we're hoping that they thrive, right? We're expecting them to thrive. Obviously, they have that same confidence and they're very optimistic. But like you said, do they have resources to be able to fall back on if things don't go as planned? We have great ideas, but before we launch the business, have we really created a plan? A plan that's going to help me in any case that I run into hurdles. Do I have something? And I'm not saying that we don't. I would hope that through the channels that we have and the resources that we have here in our county or city, people can utilize those tools. And I think we too can use some of that investment as far as training and education so that we can help our small business people to be more geared for any downfalls or hurdles or even success. I mean, what happens when you have success? What's the first thing people want to do, right? I mean, do you want to continue to invest in your business, or do you want to continue and maybe don't invest and you'll struggle later in life? But anyhow, long story short, I think that's why we brought up this segment is because we see where the safe investments are, right? We see how banks typically favor homes, but again, more credit into homes means more money created that's in circulation, and it creates inflationary higher prices for people.
Yeah.
And I'm not saying that we don't need homes because there's a shortage. I'm just saying these are the effects of what's taking place today. We've kind of let money flow this way, and we've kind of neglected this other sector, which is small business. Therefore, these are the effects of it. And one could say and argue that this is what's taking place because the investments are now in safe assets, which is homes. That to me is something to consider as we're looking into making better decisions for our communities in Central Valley.
Yeah, and I think, Central Valley, and even to bring it even tighter to say Madera, that I think as a small business, you have to be focused on, again, the pot of money, which is to say Madera we have a pot of money. There's everybody here has so much money we can spend, on whatever business you're going to open. And I think we have to go at Madera and say, again, at our level, at their level, their business level, whatever, to say, how do we take from Fresno? How do we take from Merced? How do we take from the surrounding areas from their pot? Because that's how Madera is going to grow, right? I mean, because yes, we do have, like, Madera's fortunate enough to have like ag, and we have some of these large corporations that sell outside of Madera. So they are essentially filling our pot up from outside sources. But I think as a small business, that's the other thing to remember is that, how do I make a business that doesn't just take Madera's money? How do I take Fresno's? How do I take the surrounding areas? Because again, the engine of the small business is once it comes here, like you said, I pay the wage of hopefully Jose, who lives in Madera. Jose eats lunch down the street in Madera. Like that cycle of that $1. I remember that coming from my economy teacher was explaining, like when I receive $1 as a small business, and then I pay Jose that $1, and then Jose goes and he spends it for lunch, and then I buy, the computer from the local place, like how that $1 can just turn into multiple rounds of dollars, and how it kind of, again, as an engine, makes everything function.
The velocity of money.
Yeah, so, it's understanding a lot of that to where, again, where do we have those disconnects? Where is that cord? Well, small business, I made that $1, and what I do, I go on Amazon and I go buy the thing that I need from Amazon. And that $1 goes out of the system, and it's been lost forever, right? Amazon gets it, Fresno gets the sales tax out of it potentially, and again, like it's lost money, So the only way to recapture that is, again, hopefully grabbing that money from outside of Madera again and putting it back in our pot. But if you're just I'm taking from Madera, and then I go and I just buy from some corporation that's outside of Madera, that's where you have that hole, where you have that leakage. That why you say Madera is not growing is because we need to grow our own pot. So.
And I get back to that argument is that, homes versus small business, right? Yeah. And think about it, Rohi. If I'm an investor, I mean, I work hard. Mm-hmm. I have additional money, and all I hear is, hey, rentals are a good way of passive income. And this is kind of the heart of the conversation. It's not so much for that one person looking to buy their actual home where they're going to reside at. Mm-hmm. It's this craze of wanting to acquire more assets, but also more wealth-producing assets, mm-hmm. right? And homes have always been that safe asset. So it's kind of amplified more in the last couple of years with how you hear it in seminars, you hear it mm-hmm. in media, and passive income. So then everybody shifts their capital to these investments. Mm-hmm. And by shifting your capital to these investments, that creates somewhat inflationary because all the money is flowing down to these investments. Yeah. And these are the homes that become not only the shortage in homes for families, but it also becomes higher, less affordable. Yeah. And that's what I'm talking about. So
but I mean,
how do we...
do you block that? But that's your point. Yeah. Does the city say rentals now have a more penalty? We obviously, there is business licenses and certain things that go along you're supposed to get as a rental or somebody with a rental. But, some of the coastal areas with Airbnbs, you see them really jack up rates to kind of make it competitive against their hotel market because, they don't want to have lost revenue there. You almost say the same thing. If the attempt is to kill rental, then you make it more expensive to have rental than a normal home.
Yeah, and I'm not saying to kill.
I know. Yeah.
I'm not saying to kill it because.
But if you did, the housing affordability would follow suit.
Yes,
if that's what you're really after.
But again, it's how we incentivize. Yeah. Why is it that this has become an incentive for people to jump on this? Because one, again, they're assets and they produce money, passive income, all these great benefits that it brings there, right? Correct. So the question is, how do we make investing in local entrepreneurs or small businesses mm-hmm. as attractive as a rental property? That's the question that I have. What do we have to do? And again, this may be a question that we're not asking for an answer,
Sure.
but it's a question to have, because if we really want to bring a think tank to see how we can start generating productivity in small business,
Yeah.
and not so much focusing all the cash or capital here in these rentals and what have you, then that's the question. How
Yeah.
can we bring back that small business mentality? Because I was out at showing a property up in the Oakhurst area and Bass Lake, and talking to some of the locals there, they had it up to here in these Airbnbs because
Yeah.
it wasn't really what they planned for when they moved out there.
Correct.
Now neighbors are renting these properties to, who knows, multiple people. They come for the night. I mean, and I'm not saying all people, but it happens when it's during the tourist when there's tourist time, right?
Yeah.
People want to go out to the lake. They want to visit Yosemite, and hey, you got a gang of 7, 8 people coming in. I'm not saying a gang, but just a lot of people coming in, and they're
Yeah.
making a lot of noise, and people don't like that. The
Yeah.
reason why they moved out there. But again, that's the freedom of owning property. You can do that. It's an investment. But there's been some introductions of certain things with Airbnbs, right? And maybe limited the amount. But like you said, now you have to enact a policy to make it not as lucrative. I don't know. Maybe it's not, the incentive is not there.
Yeah.
And maybe we can start shifting that incentive into looking at entrepreneur and opportunities. You know, that's kind of where I'm at with that.
Well, I mean, and again, I think, you know, what I've told people in the past is it's the low barrier to entry. I mean, right now, what does it take to buy a home and turn it into a rental? A loan. That's it. It's a bank loan, right?
And
But if you want to open a business, permits and all these things that go along with opening the business, that regardless of the money aspect, the time and the effort that it takes just to get these certain hurdles, you know, is just enough to make it for some people start looking at the business and the small business, and they just go, to get the permit and all this crap before I even open the door on day one to get my first bit of income. What do I have to do? You know, so many more things, especially with, you said, the grand openings. Some of these projects that took like a year or two to build, you know, it's like,
You were in the planning commission, so you know how it is. I mean,
exactly. I mean, the average small businesses might take 6 months from the time they submit to before they even open day one. So, I mean, you think of that, like, it's kind of daunting. So,
yeah. So, like I said, you know, is there a way for us to shift and incentivize that so that we have more real growth,
Correct.
productivity with jobs and what have you, to be able to bring more money into this local economy is what I'm trying to get at. Because essentially, then we'll be a valley of just debt, debt to these homes, and I get that. I mean, there's passive income people. I mean, everybody knows the Rich Dad Poor Dad and all these other books that they talk about. But by shifting that mentality, this is what we've created so far. We've kind of priced out the locals from ever considering buying a home now, because that just becomes unaffordable for them, right? I mean, especially with the household median income around this area.
but that's what I'm saying. And that's the key piece of the puzzle, is to say, do we design Madera to make every Madera resident that's here right now wealthier so that they can afford the current pricing? Or do we say we want to attract the people that can already afford it to come here and essentially push those people out? You know what I mean? Because
Gentrify. I hate to use the word gentrify.
Well, yeah, but I mean, that's what
kind of
happens
what
in
you're saying.
town.
Yeah,
I mean, that's what happens like in the Bay areas, is that your average middle to low income person that probably bought a house 20, 30 years ago and could afford it can no longer afford it. They don't make enough income just to pay the sales, the property taxes and all these things, so they're forced to sell it. Now they get paid out. Their little, 1,000 square foot home goes for a couple $1 million, but they can't live there anymore. They're forced to leave, and that's what I'm saying is do we look at it as a city and say we want to keep those people, so we need to make them prosper and get more income, or do we allow that process to happen and just say, hey, look, Madera doesn't want those kind of people here anymore, or any city in
Yeah,
general.
yeah.
And we want the people that can afford to be here. So we really don't care about the price of the house because it kind of naturally makes it so you can't live here. You
Yeah.
know? And so I don't. I mean, I know that's kind
No,
of.
that's a.
but
I mean,
it's
it's an interesting
aspect,
point
so.
because at the end of the day, you know, we are a free market,
Mm-hmm.
right? And adding a lot of regulations is no different than the same thing with the zoning permitting.
Yeah.
You're really there to guide a business, not so much to tell them how
Correct.
to run their business, right? Because if you do that, then it makes it hard for someone to say, well, I can't make money when you're telling me how much I can make.
Correct.
Right? And it's no longer a free market. So,
Yeah.
no, I know. And those are good questions to have. Roy, I think we beat this one,
Yeah,
beat it
yeah.
up pretty good. I think
Correct.
we talked about most of the points. But again, you know, just the key takeaways is that the housing crisis may be more than just a housing story. It may also be a story where capital flows. We talked about how if people want to continue to invest in the real estate and the assets and know that that mentality will have an impact on how, you know, affordability becomes in the future, right?
Yeah.
So, and this is just a topic because later on in life when we see this, well, we talked about it. Yes, I remember. And here we are today.
Yeah.
So anyhow, with that, Lori, if you have nothing else, Rohi, we'll go ahead and just sign out. Thank you again for watching. Look forward for your comments. Please like, subscribe, and share.